it's a great time to see the asset ramping up, especially as we get more volumes into a period of what's expected to be greater market strength on the pricing side.
Hello, you're watching Proactive. I'm joined by Ecora Resources CEO Marc Bishop-Laflèche. Marc, good to speak with you. Your team's just come back from a visit to Voisey's Bay, so let's take a look at this investment in more detail. To start with, could you remind us what it is you own?
Well, we have a stream entitlement at Voisey's Bay in relation to the cobalt production. The mine primarily produces nickel and produces cobalt and copper actually as a byproduct. And Ecora is entitled economically to just under 23% of all the cobalt produced at Voisey's. Voisey's Bay mine is majority owned and operated by Vale. And that mine began sort of 20 plus years ago as an open pit operation. And that open pit that material has now been depleted. Operations have moved and are moving underground.
The project's been a bit delayed, but is now starting to step up. Is that right, Marc?
Yeah, that's correct. We saw the project transition more slowly from the under pit operation to underground mining. There are two deposits at Voisey's Bay. One ore body is called the Reid Brook, and that underground deposit, and the second is the Eastern Deeps underground deposit. Production at Reid Brook began in June 2021 and has been ramping up since then. So by year-end 2024, it looks as though Reid Brook operation should be knocking on or around 100% of production targeted levels, or close to. And the second big ramp up we expect to see really over the course of next year and 2026 is the mining rate at the Eastern Deeps underground ore body. And over the course of the fourth quarter, and to a degree, what's already been completed in the last quarter, all the mining and all the activities really necessary to mine are either complete or imminently completing, such that we should start to see the operations over at Eastern Deeps really starting to ramp up rather, starting in the second half of this year or Q4 now into next year into 26. So when you put all that together, the short version really is that we expect to see a really steep ramp-up curve to full production from these two underground ore bodies, up to full production rates by the end of 26.
Marc, could you quantify the potential impacts that underground expansion could have on Ecora?
Yeah, this is one that it's kind of hard to quantify because it's so material. We're really at an inflection point in that asset in terms of the ramp-up. And we're going to see, even in our Q3 results, the beginning, and we'll feel a step up in production and cobalt deliveries under our stream. Just to give you an example, in 2023, we received 11 deliveries under the stream agreement. At full production, on average over the life of the mine, we'd expect to receive 40 deliveries per year. So we're talking an almost 400% increase in volumes. So this ramp up is really material to this business, as you can imagine. As I mentioned earlier, full production volumes are expected to be achieved during 2026. And over the course of this year, if you want to have some more data points since we're here, in H1 we received 4 deliveries, and in Q3 we've already received 4. So we're tracking well ahead of where the operation was, and we should continue to see that, as I mentioned, an inflection point starting Q3 onwards, since this asset really gets into starts moving up that ramp up curve.
What did the team take away from their visit to the mine, Marc?
Yeah, first and foremost, it's we appreciate the welcome from the Vale team, and it's a really very impressive operation. It's the standard to which the project has been built, the processing facilities, the surface infrastructure, support infrastructure, and certainly last but certainly not least as well, just the team of people and the caliber and the talent that exists at that mine site. So a big thank you, of course, goes to the Vale team for having hosted us and the Voisey's Bay team for hosting us while we were there. The other thing that it kind of gets lost because this mine is such a small mine in the context of the wider Vale Group. It's just a life of mine potential that exists, and going to site and seeing what may be possible. It appears as though this mine or the ore body is likely to result in production far beyond the current reserve-based mine life. That's currently been communicated publicly, and in time, we're very excited to see what Vale comes out with in terms of disclosing some of the really exciting work that's being done around the project to far beyond the current reserve life.
Finally, cobalt pricing has been at cyclical lows. Are you more optimistic about the outlook for cobalt?
Yeah, I think we absolutely are. To set the scene, since we acquired the stream in 2021, we've seen cobalt prices on a standard grade product anyways, range from a high of $40, just under $40 per pound, and currently in the low teens. So in the period we've owned the stream, actually, we've realized an average cobalt price of $24 per pound. And cobalt is a commodity that is a fairly small market relative to something like copper, for example. And so you have relatively larger price swings on the back of relatively small amounts of new supply or incremental demand. And the interesting about cobalt demand currently, it's estimated that between 2023 and 2024, the world is global demand growth is estimated at 20% year on year, which is a really sizable amount of demand growth in such a short period. But that hasn't really come across on pricing, of course, because that's really been overshadowed by some fairly large capacity, like new supply that's come on into the market in the last 12 to 18 months. So looking ahead, in the absence of similar sources of large incremental supply, market commentators are generally of the view that we are at or near the bottom on cobalt pricing, and there's a general expectation that commodity prices should tighten in the short to medium term. So in that context, I think it's a great time to see the asset ramping up, especially as we get more volumes into a period of what's expected to be greater market strength on the pricing side. The other last thing to make here is that even if you don't assume stronger pricing, even at cyclically low levels where we are now in the context of historical pricing, the stream still at full production should generate for the group revenues just under $20 million per year. And that excludes all of entirely any benefit from that may be achieved as a result of higher pricing. So we anticipate that the first thing to come here on this asset is higher volumes as the mine ramps up, and we're really well positioned to benefit from a cyclical recovery in cobalt prices.
Mark, I hope you'll keep us posted on any additional progress at Voisey's Bay. Thank you very much for speaking with us today.
It was a pleasure. Thank you.
That's Ecora Resources CEO Mark Bishop Lafleche.